Hey, are you tired of watching others profit while you struggle to keep up with what's going on in the market? You're not alone, you know. What if I could, share with you an inside track every weekend on the moves that the market could be making and things you could do to change your trading game? Today, we're going to basically be taking a real quick look at a couple of things. I'm here to help you make sense of the ever changing happenings in the market, and there's going to be a lot we're going to cover. We're going to cover basically what's going on with the interest rate cuts. This guy's really happy because I guess because the cuts are happening, um, and it can be all confusing, but don't worry, I've got you covered. We'll talk about these changes, how they might affect the market, and then share 5 growth stocks and ETFs that I think you're going to find really, really interesting. And they could make a big difference in your portfolio going into the end of the year. And I'm going to cover also 4 simple strategies that seem to keep coming up again and again and again for solutions to almost any trading problem. Hey, I'm Dennis Wilborn, the Autopilot Trader. And today we're going to tackle these and many other challenges, and you'll find also some golden nuggets of that you can use next week. So, what about what's going on? So Jerome Powell just announced an interest rate cut and much more. He basically was very firm that was going to happen in the month of September. We've all been waiting for this to happen, and now it appears like it's going to actually be taking place. Is there a political motivation behind it? I mean, I don't know. Do you? It is kind of, I've been calling this for quite some time that watch the September timeframe for some cuts, because that's the last opportunity they'd have to actually do any cuts prior to the election. And so, and I don't know, who do you think the Fed cutting rates favors? The Dems or the Republicans? Let us know in the comments what you're thinking. Let us know also where you're joining us from. I hope you like today's session. We're doing a little bit of a different format. And so, yeah, as I said, Jerome Powell announced an interest rate cut. And usually cutting interest rate boosts the market. Well, that's not really absolutely true. Typically, interest rate cuts actually depresses the market and drives it down over the next, few months and all that kind of stuff. So it almost seems as if cutting rates hurts the market, but we'll have to see what happens with this particular one. One thing we're sure of is that interest rate cuts tend to help the small caps out dramatically. And so we'll see how that trends out. Could this move to help the economy become before the election, or is it something else on what is something else that we're going to be basically having to keep a look at? So let's take a closer look at the spiders, the Russell, and the NASDAQ to see how this news of a rate cut, how it impacted these indexes. So let's jump over and first take a look at one of my favorite indexes, which is the, there we go. Let's take a look at the spiders. What are we seeing here on the spiders? We'll blow this up so you can take a better look at it. And go over here and grab my pen really quick. As you see, the price action, while it went zooming up to the high of yesterday, look what kind of candle that was yesterday. That was a bearish engulfing candlestick at the end of an uptrend, and it followed right behind a hanging man, also a negative bearish reversal signal. So with that in place, Are we actually more in line with a potential pullback into the moving averages? That could be. Also, look to the left. We're up in a zone of past what I would call resistance because there's a boatload of sellers that are still up here who were buyers in that last rally here, but they basically were the last one on the bus, and pow, they yanked the rug from out from underneath when it fell this hard. And so there's a bunch of sellers, and as long as these sellers are here, this is going to be a hard place for the S&P to get back through. Take a look at what's going over here on the weeklies, and you can see we're pushing up towards the old highs, but look at the momentum, both on the TSI and the RSI. It is not making or coming close to the new highs. So we've got a bit of negative divergence that are going on here. It seems as if this is very much in line with what we should expect seasonality-wise for the indexes, which seasonality says going into September, which we're just a week away from going into September. September is it is the weakest. It's the weakest month of any month of the year. And so now I would normally jump over to the Russell here, but I'm going to jump to the Qs first to see how the Qs are reacting to the news of another of a rate, lowering the rates. And check this out. Same dadgum pattern. Bearish engulfing. This bearish engulfing from yesterday, that wrapped up 1, 2, 3 days worth of movement to the upside. So that's normally not a real positive sign to be looking forward. The good side is that we are holding the 8-day moving average. The kind of the negative side is our momentum on the daily basis is in fact shifting to the downside and falling. Look for a pullback, and this is a great place if you're a trade Fibonacci's to throw a Fibonacci on this high to low right here. This is from there up to this high here approximately, and see how far a 50% retracement takes it. As you see, down to about 454. And it also corresponds to a gap up. And so the zone here, I'm going to go ahead and get rid of this zone. Let's pop this one out of here. Remove that so we can see the next one. Look for it to pull back into the magic fib box and then drive prices up from there. That could happen between now and the midsection to the end of September. And then that could lead us into a year-end rally that would take us in through the election period and all that type of stuff. I think as things hone in towards the end of October or towards the midsection of October, where we have a better idea of how the election is going to potentially go, I think that'll drive prices. That will also be an impetus to drive prices. Who knows? I mean, it may go all the way until November before we get our typical year-end rally, and that's okay. We can wait. We'll be, take some profits off the table, move things around. But right now, I'm looking for just a very simple pullback into the magic fib box approximately. Doesn't have to get all the way down there, and then a bounce from there to take off. And I'm looking for that to take place during the first 2 to 3 weeks of September. Moving along, let's take a look over here we saved the next one, which is the Qs. Now I stayed IWM because IWM represents a small cap, and it's not backing down. Of the 3 indexes, if you're trading the leverage ETFs on the 3 indexes, I really like the Russell, and that means I would be looking to trade TNA, We have been trading TNA on our premium services and doing quite well with it. And so I would, is it a buy right here? No. I'm going to wait for some kind of a pullback into the 8-day moving average and or the 8-week moving average, but it's definitely getting itself in gear. And look at a nice volume coming in here to increase what's going on. So that's what we've got going on with the indexes. The rate cut is big news, but it's just beginning. So coming up next, I'm going to reveal 4 strategies that you can use to solve almost any problem you may be having with the market. And so every trader, no matter how experienced, runs into problems. It might be timing, risk management, or just having a clear plan. And these problems can lead to missed chances and even losses, which can be really frustrating. But don't worry, I basically spent years researching the issues. Like I just did a presentation yesterday about the 23 biases that we traders tend to carry around with us. And biases are nothing but false beliefs that cause us to make poor decisions in our trading. But regardless what the problem is that I come up against with trading, I find that there are 4 solutions that tend to resolve and take care of that, and also help you to establish better trading habits. So we've cut, so let's take a look at what these are. First, use a stop loss. Yeah, it's that simple, guys. Use a stop loss. I remember when I first started trading, I refused to trade. I refused to use stop losses. And I said, I'd go to, I don't need no stinking stop loss, and I would just, go on my way. And it wound up, I blew up 2 6-figure accounts because I was so stubborn and egotistical that I wouldn't use my stop losses. So I would suggest, even if you don't have a written plan yet, use stop losses, and somewhere between a 5 to 10%. It will make sure that you'll have the money to trade when the time happens. Secondly, follow a written trading plan. If you don't have a written trading plan, I provide my rules on one page to anybody who asks me for them. So if you want one, drop a copy of that, drop a DM down in the comment section, and I will send you, that's over on the YouTube channel, I will send you a copy of my rules on one page. I've been using these for 15 years and beating the snot out of the S&P. Those of you know how I trade know how that works. Secondly, use a journal. Track everything that you do with, in the trading, and write down not only what you're trading, but how you're trading. And there's a whole, a way of doing that so that then you can use that to become and learn to be a better trader. Lastly, number 4, find a mentor and a trading team. I am so pleased to, one, be a mentor, but also with our Discord channel for our premium members. I love it when members are mentoring each other. Absolutely phenomenal. Absolutely phenomenal. And so, so we've covered the strategy, but now, but how do you keep track of all of it? I've got a tool that you can make a huge difference in your trading success, and that tool happens to be my trading journal, which is the AutoPilot Trading Journal, and you can find this over on Amazon. I'll leave a link to it in the down in the description. But without a good record of your trades, it's easy to make the same mistake over and over, or you miss out on important lessons that could help you improve. This is over 180 pages. And that's where the AutoPilot Trading Journal comes in. It's designed for traders like you to keep track of every trade you make by using this journal. One of the things that we're really pleased about with this journal is we were contacted by a trading house in Great Britain who actually, uh, basically bought 250 of these journals, and had them, put on a different label because they love this journal so much. So we all want to find the next big opportunity. Well, I've got 5 stocks that are coming up, so don't miss out on that. And here we go. We'll jump right into that. And I'm going to tell you exactly where and what I'm going to be trading with these stocks. So, which stocks are they? And so, I want to thank you guys for joining us today. And we're not done yet. We've got the stocks to take care of. Don't go anywhere. Anyway, the first stock I want to take a look at is our buddy. I have to get, darn it. There we go. There we go. Okay, the first one I want to take a look at is, as I said, I wanted to basically look towards the cheap growth stocks. And yeah, there are a few. And when I say cheap, I mean good bargains. What's a good bargain? So I like NVDA, but that's not what I want to highlight. NVDA is, it's got earnings coming up here, right here on the 28th, which is next week. That's actually next Wednesday before the market. It's looking pretty good to the upside. We're getting again, it's showing an inside day. That could be very positive. However, what I want to look at trading is NVDL. NVDL is the 2-time, and if I type that in there properly, NVDL, there we go. Now, the NVDL is a 2-time leverage ETF for the NVIDIA. This has weekly options, and so it gives you a couple of different opportunities to be able to trade it. I like that it's bouncing right off the 8-day moving average. Let's see if we can break out above this high here. This is really interesting. I always like, this is one of the reasons why I use the fibs. Notice it got all the way up to the 1272 extension, or actually, 1272 extension, stop dead in the water, drop back down. We actually had been trading this from down here about $55, took out profits there, holding on, and then I'll be looking to add to this. This is looking like it's put in a parallel flag, break out above that area. Watch out, because then it could take off and run the rest of the way up to, give you a number here. If I break out here, a good 30 to 35% from where it currently is at. So NVDL, do we have to be careful with earnings? You betcha. But is it worth a nibble at $65? Now, when I say a nibble, is maybe like a quarter a position, or and then see what it does during earnings. One thing we know for sure is NVIDIA and NVDL is not going to go away. Next up is another of my really favorite leverage ETFs, and that's BITX. This is the leverage ETF 2 times, I think it's 2 times of Bitcoin. Yeah, 2 times of Bitcoin strategy. Making a nice move. Look at the volume starting to come in and starting to push up. Yes, it's got some congestion up here above the, right up here above at the 50-day moving average. However, it is respecting the 8-day. And so any pullback back into the 8-day moving average would be of interest to me to add to my position. And this is a really great entity to basically go out, buy a leap, or an option that's 6 months out, that's at or in the money, and then sell weekly options against it. And you can basically, it has such really great premium. It can turn a good 5 to 6% return on a weekly basis. So BITX, liken it up to the upside. Watch these trend lines, because that's where it could run into issues. But it looks like it's really starting to turn around very nicely, and we'll see if we can push on through the 8-week moving average. Next up is a relative of this, and that is Clean Spark. It is a mining entity. Also, isn't it interesting? It's showing a very similar pattern to what we're seeing um, with the BITX. Again, this is a mining company. Again, has really great weekly options, and it's priced at 263. If we push back up into these I was trading this prior, in earlier in the year, and I was trading it because it would basically show these patterns where it gets stuck in a horizontal range that would be about somewhere between. Let me get that up there. Yeah, about 40% run. The And so I'm looking for it to do something similar. So from there to there, we were talking about, about 30%. And it happened multiple times. It's almost like on a weekly basis. So keep your eye on this. We've already run up from the low to this high. We've run up about 35%. So looks like it's still primed to head higher. And next up is, and you got to hold on for my last pick. This is not it, but I think the last pick you're going to be very pleased with. PLTR. PLTR has broken out. I'm looking for it to pull back down into the breakout area, which means it's going to have to go below the 8-day moving average. But I like it down at a level of about $30. And let me zoom in and throw that in for you. About $30, taken off the highs right there of these past highs. So somewhere in that area. And I believe, let's get a number on that. And that is at $29.95. So I did a pretty good job of eyeballing that to make sure that it was in place. The momentum on this particular entity has rolled over and is rolling over. And so that's telling me that as it rolls over, the volume on this is staying very, calm. As it's pulling back, if my volume is falling on a pullback, that's usually a very good sign. So where am I looking at buying? As I said, down probably somewhere between about the $30 level. Could drop a little bit further than that. The other thing I want to be watching is just watching this 50-day moving average and the 34-day moving average. It's going to keep tracking up. And oftentimes what will happen is price action that's going sideways like this will track sideways until it actually hits one of these uptrending moving averages. And then bingo, bango, it takes off from there. And so PLTR is a really good entity. If you do not trade this next entity, I think it's you should at least entertain both this and TQQQ. TQQQ and TNA over time, usually during the year, they almost match each other going back in time, having 4 to 6 trading opportunities through the year that compounds at over 100%. So if you want to be, looking how to compound your holdings at that amount, TNA is a great opportunity. TNA is finally breaking out. It's not a buy right here, but what I'll be watching is for that pullback into the 8-day moving average, which will be about $41 to $42 next week. Another way I can approach this particular trade or potential trade on this is a pullback back into the midsection of the big green candle, which that would be a pullback to about 40 to 83. That midsection, a lot of people don't realize, but that midsection of the big candles, the reds or the greens, the midsection turns out to be a very strong level of support. Now, when I say midsection, I'm not basically saying right square dab in the middle, but the middle third, somewhere that is a zone of support in this case that could work in your favor. So, And again, if you picked up a trade about that area and you just wrote it back to the highs, okay, you're talking about, you know, about 18% over the next little bit. At the same time, if you, there we go. If we look over here real quick, I'm going to grab the monthly chart. And look, we're early in a potential move on this on a monthly chart. Well, what happens if we get in gear through the end of 2024 and 2025? Well, this sucker could potentially, and it's no guarantee, but it could potentially do a nice little run of about 100%. And that's what I'm talking about, is just being aware, being ready to take advantage of the charts. And this one is one that I want to stay on top of dramatically. So, folks, of all the stocks that we covered and entities that we covered, which one did you find most interesting? Please leave a comment and lay it down in the section there. So today we talked about how the upcoming interest rate cuts could affect the markets. 4 simple strategies to solve your trading problems, the importance of using the AutoPilot Trading Journal, and 5 affordable growth stocks / ETFs that could bring you great returns. If you can, hey, if you found today's tips helpful, hey, thanks, Charlie. TNA. Yeah, I like TNA too. Mike, yeah, NVDL, PLTR, and TNA. Excellent. So if you found today's tips helpful, make sure, hold on a second. Let's go. Let's do this. Let's do this. There we go. So if you found today's tips helpful, make sure to subscribe and share this podcast with your trading friends. And remember, like I always say, plan your trade your plan, and make your trades with confidence. So aloha. God bless everybody. Join us next week as actually, there will not be a session next week because it's the 5th Friday, and I take the 5th Friday of every time a month has one, I take that off. And so there will be no section. I may put up a recording because I just can't help myself. And so anyway, if you're loving it, let me know about it. So there's always opportunities in this market if you know where to look. So we'll talk to you later. I have to do one more thing, guys. I got to read the disclaimer. Hey guys, remember that all materials presented are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance. So again, as I say, aloha, God bless everybody. See ya.